Listen, the volatility of Bitcoin is well documented, but if you've held it for the last 5 years, as I have, I'm pretty good with it. And I know it's going to be volatile. And I try and keep it at a 5% weighting. So sometimes I add on the dip, sometimes I sell off on peaks. I keep it at 5%. It's an old market strategy. That's nothing new. The only decision you have to make is, am I going to put crypto into my holdings? Is it part of my portfolio strategy? And if so, which tokens, which coins, what am I doing? And for me, you start with the granddaddy, Bitcoin, maybe 1 to 3% weighting, add a level 1 or level 2 like each, and start developing some diversification. But I'm all locked in. I'm going to be holding crypto because I believe in the next 5, 6, 7 years, it's going to be the 12th sector of the economy.
In the next 5 to 10 years, Bitcoin and crypto in general could join energy, finance, and tech as the 12th sector of the global economy. That's the prediction from Shark Tank investor, entrepreneur, and chairman of O'Leary Ventures, Kevin O'Leary. In his recent interview, Kevin O'Leary explains why he now sees Bitcoin as a permanent fixture in global finance. He believes it has matured past the point of being a speculative gamble and is now establishing itself as a reliable store of value in an increasingly digital economy. For O'Leary, Bitcoin earns its place through transparency, scarcity, and institutional momentum, traits that traditional assets are struggling to match in today's climate. As market cycles rise and fall, one thing is becoming clear across traditional finance. Digital assets are here to stay, and Bitcoin is leading the transition. Make sure to stick around until the end of the video, as Kevin O'Leary reveals why he believes Bitcoin's adoption and value will continue to accelerate in the years ahead.
Crypto markets. Anybody that's tried to forecast the price of Bitcoin or any other crypto security has been wrong. And so I don't take that position at all. You try and time it, you never make it work. Let's say you decide you're going to have a 5% weighting in Bitcoin as I do. That's in a portfolio. My crypto holdings are about 19% overall, so I have other securities. I also have a 5% weighting in gold. I diversify my risk, but I'm not selling my Bitcoin because me or any other analyst tells me they're anticipating a 60% decline.
We have crazy speculation, rumors around market manipulation. So isn't that a sign that Trump is actually not a factor legitimizing crypto as you thought?
Yes, all of that happened, you're correct. However, that's all noise compared to the opportunity at hand, which is really about what's going on in the Stablecoin Act, now called the Genius Act, that was brought forward by Haggerty, and now Jill DeBrandt joined it, co-authored, Republicans, Democrats. It's the first attempt to legalize a stablecoin backed by US dollar. And it's immensely important for the crypto industry. Even though you've got the meme coins, you've got the noise, you've got the volatility in the equity markets, we have been waiting for almost 7 years for this legislation. It's the first of a series of legislative moves. This is going to be the Stablecoin Act, the lowest hanging fruit. After that, Market Structure Act, which will finally determine whether Ethereum and other situations are commodities or securities. And we really need this to start happening because every sector of the economy, and I go right to the Stablecoin Act, this is digitizing payment systems. Digital payment systems are going to be a radical change in financial services. And this is the first step. So I agree with you, there's a lot of noise, but this is the focus right now. And we're talking about weeks away from this move. So if you're a crypto investor like I am, the potential of just this first move is like a chess piece. It's the pawn going out to the center of the board. I see finally that stablecoins are approved. I need a wallet. I'm going to download Robinhood. I'm going to put $10,000 or $1,000 or $500 into my Robinhood account, and I'm going to transact with somebody else that has a Robinhood account instead of going through a credit card transactions. I'm going to save a fortune. I'm going to save 200 basis points. That's going to happen all over the place. It's going to happen like that. And so you want to own a piece of these exchanges. So I own WonderFi, I own Coinbase, I own Robinhood, because they're all going to benefit just from this first act. I keep going back to this act because it's such a big deal. It's a game changer, and we're so close. And if it doesn't pass in this round, it'll pass the next round. This is coming.
Of course, we are very bullish on Bitcoin and crypto in the long term, but when it comes to the midterm, let's say 2025, do you see Bitcoin closing the year higher than it started?
I would say yes if two things occur. The Stablecoin Act passes and the Infrastructure Act gets considered in this Congress. If those two things happen, it's going to put a lot of positive pressure on institutions to start getting teams together to examine what their strategy is going to be on crypto. I mean, the Market Infrastructure Act for crypto is a big deal. That's also a very big deal. But the first one is the Stablecoin Act, the Genius Act, whatever you want to call it, that puts in place policy on how we're going to use a digital payment system all across the world based on the US dollar. And that makes sense because every commodity on earth is priced in US dollars. So the minute that happens, all of my businesses are going to open. In my case, I'm choosing USDC because I'm disclosing, I'm a shareholder in Circle, and I trust the audit. That's all I care about. I want to know with certainty that one USDC equals $1. Once I have that, I'm going to have a lot of that in all the balance sheets of my companies to transfer capital between them across every country. It's so much easier than the FX market.
With the Stablecoin Act expected to pass within weeks, followed by the Market Structure Act, Kevin O'Leary believes the foundation for full crypto integration is finally here. This could pave the way for institutions to enter at scale, and for stablecoins like USDC to dominate global payments. And when that switch flips, exchanges like Robinhood, Coinbase, and WonderFi are positioned to benefit the most. O'Leary says he's already buying in, preparing all his businesses to hold and transact in USDC. In his view, once stablecoins are official, every company will need a wallet, and the real growth will move fast.
Some critics of the bill are saying that such an act would put enormous power in the hands of big tech like X, like Amazon, like Google, that they would be able to issue their own stable coins. Do you think that that is a valid concern, or you don't see any problem here?
No, I'm not concerned about that because I think what's going to happen in terms of regulators is going to say, look, the currency that we've used for over 200 years successfully has been the American dollar. All we're doing is digitizing the American dollar. I'm not sure they're going to let every single e-vendor come up with their own token to use it for transactional purposes. I'm not saying that's going to happen, but I don't care about that. What I care about is getting a digital currency I can trust, put on a balance sheet, and use globally. So, I'm not worried about, and in terms of innovation, I do not want the federal government innovating anything on crypto. There's no evidence they've ever innovated anything. So let private companies come up under the act. It's just like mutual funds or money market funds. Let them come under the act to build under the terms of the transparency and the assets that have to be presented and audited, and let there be multiple stable coins, and I'll choose the one I want. I'm going to go with USDC. I said why. I've been using it for years, but maybe others come along. I don't care. But having, an Amazon token and a Shopify token, I don't see that happening anytime soon. I like utility on the blockchain. It's not just Bitcoin. I'm looking for things. One of the reasons I like HBAR is large corporations are starting to look at it. It's very volatile. It's sitting around 18 cents. I think it went as high as 29. I mean, it's a really roller coaster. I'm not telling people to buy it. I own that. I own Ethereum. I own somewhere in that. I own Bitcoin. I have a basket of these things because I don't know with certainty what's going to perform. But but people ask me, what should I buy? You can get 90% of the market's volatility with one position, Bitcoin. So you don't need to own everything, but if you want some diversification in function and utility, start small. But that's why I'm saying, for me, what's going to happen is these regulations are going to pass and people are going to start to experiment and they're going to, download Robinhood. And they're going to say, okay, I'm going to put 10% into crypto. Which one should I get? Well, they're going to use a wallet. They're going to use something they can have real ease of use. And one way to own crypto is to own the picks and shovels. Buy some of the exchanges. They're all public. Clearly, there's a market for Bitcoin. It's a volatile asset. And had you invested in it 24 months ago, it was probably one of the best performing assets you could have invested in vis-a-vis the US dollar or any other currency. So while I respect Warren's view, and certainly Jamie Dimon's a successful executive in the money center banking industry, the market doesn't care, and they'll make their own decisions and they'll take their own risks. everybody has an opinion, and that's how markets are made, and that's absolutely fair. But I think the market has spoken on Bitcoin. I think it's here to stay. There's only 21 million eventually Bitcoin, a piece of information on scarcity, and therefore there's no government that can print any more of it. That's not the case for any currency like the US dollar, or any other currency for that matter. And so if you're concerned about that, and there's an unlimited supply of money you can print, you may want to take a position in Bitcoin, because it's not something that's unlimited. It has scarcity. And that seems to be what's driving its latest price appreciation. There's another conference coming up in Las Vegas shortly. There was a lot of speculation it would be at 100,000 by then. In fact, it is past that. Nobody really knows about the demand metrics at any one time. One thing is certain, though, about the price of Bitcoin: it's volatile. And so if you're going to own it in a portfolio, you probably need diversification, because the volatility in Bitcoin is, in some ways, more volatile than any other market. And so I think it will remain highly volatile until the institutional investor is allowed to allocate to it, because institutional investors put generally a 1% to 5% weighting in any one asset class, and they hold those positions often for extremely long periods of time. And so when they come into the market, they'll be buying and selling and making markets for Bitcoin that don't exist today. And I think that's when things stabilize for Bitcoin. And I think we're a little ways off, maybe a year or two. But I know that if the Stablecoin Act passes, I, along with many others, will be working on clearing the Market Structure Act that will determine Bitcoin's place in the institutional cap table.
In other news, the latest 13F filings reveal that institutional Bitcoin ETF exposure is shifting, but not in the way many expected. Recent filings show a dip in total Bitcoin ETF holdings from $27.4 billion to $21.2 billion. However, it turns out that number doesn't tell the full story. According to CoinShares' Matthew Kimmel, the decline mostly came from hedge funds cycling in and out of positions, not from a loss of confidence. The real signal is that registered investment advisors, wealth managers who tend to hold long-term, actually increased their exposure to Bitcoin ETFs during the same period. This plays directly into what Kevin O'Leary has been saying. He's emphasized that institutions and wealth managers are the real drivers of Bitcoin's next phase, and the rise in RIA adoption proves it's happening. Rather than chasing hype, they're using Bitcoin ETFs as part of long-term diversification strategies. At the same time, corporate adoption is exploding. Firms are pivoting to the MicroStrategy model, buying and holding Bitcoin as a treasury asset. Corporations held 1.68 million Bitcoin at the start of 2025, which has already climbed to nearly 2 million Bitcoin by mid-May. That's an 18.6% increase in just 5 months, with no sign of slowing down. As O'Leary noted, once legislation like the Stablecoin Act clears the way for digital payments and regulated custody, these trends could accelerate. Even companies that previously rejected Bitcoin on shareholder votes may reverse course as price performance and currency debasement shift the calculus. What looks like a lull from the outside is, in reality, a rebalancing. Institutions are recalibrating, not retreating. The foundation is being set for deeper, longer-lasting Bitcoin adoption, and ETFs are positioned to benefit as the trend matures. Anyway, guys, before we go, if you want to stay most up-to-date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.